Identify major market swing points like a pro, using master key signals that mark inflection levels, along with consistent higher timeframe confluence factors. Spot momentum shifts in a timely fashion as the market gears up for a major change in direction, live. In our last video, we examined epic moves on the US30 Index live chart from November 13th, where we began tracking a sell signal that triggered at 9:20 GMT+2 on the 5-minute timeframe. We saw trade entries running in profit, one of which is shown here. The sell signal delivered a staggering measured move of 973 points as the market drew to a close, with a drawdown of just 11 points. We're talking 973 points in one day. We also projected a further market decline, expecting price to gravitate toward a key zone of confluence on the daily timeframe, a downward move still worth capitalizing on, before the potential resumption of the dominant uptrend from that critical zone. The red arrow highlights the sell signal bar. You can also see the corresponding short trade, a delayed execution referenced earlier, the entry level of which is marked by this red horizontal line, as we continue tracking the moves following the November 13th update here on the H1 chart. You can see how the market decline played out significantly, with price finding support at the marked level. Note that the indicator is highly versatile, making it suitable for scalpers, day traders, and traders who go in for the long haul. Now, if you're one of those long haulers with a short entry at the marked level, sitting pretty is an understatement. We're talking an impressive 2,624 points in profit by November 20th, and the drawdown? 32 points. This outcome is remarkable, given that the entry was delayed relative to the 9:20 trigger bar's actual open, the signal arrow of which has been transposed from the 5-minute chart onto this H1 chart. On the November 20th 5-minute chart, we observe what appears to be the final phase of the market decline, as attained levels overlap a daily timeframe key area. We also see a few trade signals, where we highlight all measured moves including those of buy signal for comparative analysis, reflecting the market's inherent cycles of impulses and pullbacks. Note the dynamite sell signal move of 823 points with literally zero drawdown, delivered in just 1.5 hours. This is a remarkably powerful move worth catching, to say the least. The market reopens, telltale signs emerge of a bullish trend resumption, as price advances into a critical zone of confluence on the daily timeframe, the details of which will follow shortly. The dynamite sell signal now extends to 855 points, following a subsequent downward move beyond our marked level. Updating these moves means that long haulers with the November 13th short entry have gained additional points by spotting the market turning point in a timely fashion, that is, identifying the inception of the corrective move before the crowd caught on. This last push downward didn't disappoint either, with the sell signal delivering an impressive 94-point move with a drawdown of 46 points. Let's now annotate this move accordingly. What followed was a buy signal that triggered at 1:50 after the market reopened on November 21st, having already produced a 65-point move with a 19-point drawdown. Note that this is based on Sheik's strategy entry option 1, taken at the trigger bar's open, with the intention of capturing the initial drive upward before a potential market pullback to retest our identified key zone of confluence, where a second upward drive may then be initiated. If you're finding value in this content, subscribe to the channel, turn on the notification bell, like, share, and leave your thoughts in the comments. We're back here on the H1 chart to put things in perspective. We can see the market printed a new low, marked by the second green horizontal line, along with a green arrow indicating the buy signal that was triggered at 1:50 on November 21st. The rejection of the key zone of confluence is clearly visible there. We can now delete the first line as we fully examine the sell signal move, following the subsequent market decline. The sell signal move now extends to a staggering 2,653 points, an exceptional move overall, triggered and captured in a timely fashion on the 5-minute timeframe by consistently applying key confluence factors revealed on the higher timeframes. This perfectly illustrates the importance of a top-down approach to market analysis. In essence, the objective is to identify major swing highs and swing lows within the broader market structure, capitalizing on tops and bottoms with precision when such setups align with the trader's core strategy and risk parameters. Now, the big question is, what makes the latest buy signal a high-probability long setup? Day in day out, we observe how the market transitions from zone to zone, leaving behind signatures and footprints that once seen, cannot be unseen. Let's delve into the key confluence factors that consistently reveal themselves on the higher time frames. With our price gap indicator applied to the H1 chart, we can see the market came just shy of the first price gap's distal level without breaching it, rejecting that region and forming a fresh key zone within a heavily discounted area. All these elements align to create a strong confluence zone. How so, you ask? Well, we'll take things a step further shortly, as we move up to the daily time frame. Brace yourselves for a real eye-opener. We can clearly see the origin of the price gap lines displayed here, forming a powerful belt that overlaps yet another higher timeframe key zone confluence, the invincible daily timeframe. If you can analyze and identify these critical factors like a pro, combined with spotting our master key signals that highlight major market swings and inflection points, you'll be well positioned to capture gigantic moves, just like the one illustrated here. Taking things to a higher level on the daily timeframe, we can see the entire downward move, with price dropping directly into the key zone shaded in green, which overlaps with a strong turncoat belt marked by a green horizontal strip, evidenced by multiple rejections from both above and below that belt. This region also sits within a discount zone, with price having retraced 86% of the prior move, and aligning with all the key confluence factors previously outlined on the H1 timeframe. You can also see the November 20th and 21st candlesticks as marked. Establishing this strong zone of confluence is critical as we drill down to the 5-minute chart, anticipating a bullish flip that could propel price higher as the dominant uptrend resumes. This is where we identify a shift in market structure and yet again, a pullback into a discount zone, our familiar repeatable pattern that typically precedes the triggering of a chic signal on the 5-minute chart. Now, can you spot this signature pattern? There it is, the run on the previous low, followed by a clear shift in market structure and the subsequent deeper retracement exactly as anticipated. Also, the November 21st early riser buy signal that triggered at 150, produced an initial upward drive, which now extends to 179 points. This came on the heels of a shallow retracement following the market structure shift. This chic strategy entry option 1 yielded impressive gains, providing an opportunity to ride the initial bullish wave, with the intention of exiting at the next structure levels before the pullback occurs. A sell signal then fired at 6:05, with the full retracement now clearly visible, a deeper pullback into a discount zone and the identified higher timeframe key zone of confluence, having delivered a 181-point move. With a drawdown of 33 points as shown here. Now, this is where chic strategy entry option 3 kicks in. A retracement-based entry that involves going long after this pullback into our identified key zone of confluence, within a price gap and a discount zone for buy setups, often purging nearby liquidity pools in the process, as outlined in our previous videos. Observing price action to identify the aforementioned elements is critical for a potential sniper buy entry, while ultimately targeting structure levels on the daily timeframe. Note also that drilling down to a lower timeframe for granular entry execution is key, as this enhances precision and helps the trader to manage risk effectively. This approach allows for tighter stop-loss placement relative to microstructure, improved reward-to-risk ratios, as well as confirmation of intent through lower timeframe price action. As a homework assignment, jump onto your charts to hunt for a sniper buy entry setup from this key zone as outlined. Monitor the move to capture maximum potential gains as the market unfolds, and share your journey in the comments section. Back with some updates from the higher time frame perspective. Now, our November 21st, 1:50 GMT plus 2 buy signal, coupled with its trigger level have been transposed onto the H1 chart for easy visualization. Focusing on Sheik's strategy entry option 3, we clearly see the anticipated liquidity purge within the confluence zone, along with multiple rejections of that zone. Having carried out your homework assignment, you must have also noted price gap rejections on the 5-minute chart with no candle closures below the distal level. These factors meet the criteria for a sniper buy entry, right from this powerful confluence zone, which, as you can see, has already delivered a staggering upward move of 1,816 points by November 26, with prices continuing to soar. Be sure to check out the channel pages to watch our debut video and all previous content on this indicator, where we break down the techniques in greater detail, outlining the different applicable trade entry options using the Sheik's strategy. The daily timeframe clearly shows how our turncoat belt held firmly, with a massive upthrust emerging from the key zone of confluence, just as anticipated. Since the market typically moves from zone to zone, we can still expect a further upward move, as price has yet to reach the upper key zone marked in red for starters, with the potential to break above the all-time high to establish a new higher high, provided bullish sentiment persists. Fast forward to December, the market reached the upper key zone on the daily timeframe as expected. A swing high formed in the first week, where we can now update the epic run. This places our retracement-based long entry from the November 21st buy signal at a remarkable gain of 2,381 points by December 5, as shown here. On December 11th, you can see an active sell trade entry within the upper key zone on the daily chart. The trade was initiated on a different trading account based on the breach of the last swing high, which signaled the likelihood of a pullback. In this context, a retracement of at least 50% of the previous day's candle range was anticipated, before the continuation of any bullish moves in alignment with the prevailing uptrend. Capitalizing on a high-probability trade setup like this could yield impressive gains, especially when the magnitude of the candle range is taken into account. On the 5-minute chart, we see our repeatable pattern once again preceding the sell signal, allowing for a short entry to be made at 2:03 based on our top-down analysis outlined earlier, even before the signal fired at 2:25 as marked. We can also see the last buy signal triggered a rally that broke above the December 5 swing high indicated on the daily chart, producing notable gains. Notice how price retraced just over 50% of the prior move at the Asian range low, where the sell trade will now be exited at this discount area, in anticipation of the next bullish leg. Moments later, we see the anticipated buy signal, triggered at 9 o'clock, having already delivered a massive move of 264 points with a drawdown of 14 points. We will keep tracking this rally to capture the maximum potential gains as the market unfolds. The buy signal provides high probability re-entry opportunities, as evidenced by the active trade already running in profit. Such entries are only taken when there is a significant buffer between the re-entry level and the predetermined target levels on the daily timeframe, while factoring in risk-reward ratios. The buy signal move has been updated. We can now expect a break above the November 12 all-time high marked above, where the trade will be exited to lock in profits and avoid giving back the hard-earned gains. Target hit. Stick around till the end as we continue tracking and updating all moves. Moments later, you can see another re-entry by position running in profit, as upward momentum continues unabated. Let's now mark the trigger bar's open level for easier move measurement, as we continue tracking this strong market rally. Trade now exited as the market draws to a close, with a further upward move observed. Nailing your trades depends on solid market analysis and a clear narrative to navigate the charts with accuracy. Now, that's a stunning 933-point move so far. The market reopens with an upthrust, offering additional gains to our buy signal move, which calls for an update to reflect the change. You can see this places the latest buy signal at a remarkable gain of 993 points within 16 hours. Now, let's get back to the origin of the entire move, where we mark the November 21st, 150 buy signal on which the retracement-based entry was founded. Fast forward to December 12th, we observe a swing high at 1600 hours on the H1 chart, by which time a staggering 3,162-point move had been delivered. The entire move is clearly showcased on the daily chart as well. A remarkable performance overall. Think you can master this epic indicator like a pro? Comment below and visit the channel pages to learn more. Thanks for watching. If you found this content insightful, smash the like button, comment and share this video with others. Subscribe to this channel and turn on notifications so you never miss our latest content. Explore more videos on the channel for deeper insights. See you in the next one.